Welcome back. This is Si Wing Yi from the Yi Real Estate Network, and today I'm going to talk about how to use hard assets, alternative assets to invest inside your individual retirement account, self-directed IRA. Welcome back. And so let me go ahead and share my screen. And before I do that, in fact, I need to mention not only most, if not all, rookie investors or unsophisticated investors or beginners out there. I also found in my more than 20 years of real estate investment consulting, coaching hundreds, if not thousands, of mom and pop real estate investors across the country, what I found is that very, very small percentage of real estate investors are even aware that you can buy a rental property inside your IRA in the name of your IRA, a retirement account. We've been systematically conditioned and brainwashed by Wall Street, just saying that their message is that you can only invest in the stock market, in the mutual funds, inside your IRAs, 401ks, and all those tax qualified accounts with the IRS. Not true at all. Okay, so I'm gonna here to disprove all this brainwashing that's going on, because personally, I have over the past several decades, I have helped hundreds of risk investors to buy hard assets, alternative assets, other than mutual funds and stocks inside your IRA. And this time I'm going to talk about income property. That's right. Rental property. Doesn't matter, single family home rental, duplex, fourplex, multi-units, commercial, whatever. You can buy your IRAs, using your IRAs in to buy this hard asset and achieve much higher return with very low risk compared to the stock market. All right, so without further ado, let me share my screen and let's move forward. Okay, here it is, self-directed IRA risk investing. Same, it's very simple, okay? Same tax advantages. You are just using your IRA self-directed. Okay, when I mean self-directed, you self-directed in using a custodian, a very specialized self-directed IRA custodian. I will talk more about that. Not is not self-directed does not mean Charles Schwab self-directed mutual funds in their inside their portfolio. Nothing like that. Okay, so just open to my presentation. So same tax advantages, unlimited asset classes. Okay, you could invest using the self-directed IRA to invest in hard rental properties, commercials, raw land, tax liens, private mortgages, multi-units, the whole 9 yards. Self-directed IRA works identically to a traditional or Roth IRA. Same IRS rules, same. Oh, by the way, before I begin, let me share with you my disclaimer. I'm not a I'm not a licensed tax advisor. I'm not a licensed financial advisor. This is just for educational purposes. This is my disclaimer. To go over your unique situation, you need to consult your own licensed financial advisors to go over your unique risk tolerance, your goals, and your objectives. This is solely for educational purposes. I almost forgot. All right, so let's proceed accordingly. So yeah, same rules. Okay, same contribution limits, same tax benefit on a traditional IRA or a self-directed IRA to buy income properties. So you decide what to invest, okay, beyond the Wall Street's limited menu. The IRS code never restricted IRAs to stocks, as I said earlier. Banks just make it seem that way. All right. ERISA, yeah, that's right. ERISA, the legal foundation. That ERISA stands for the Employee Retirement Income Security Act. That's the acronym. Establish the legal framework that permits self-directed retirement accounts under the IRC Internal Revenue Code, Section 408. Never restrict the IRA to stocks and bonds. That limitation come from the financial industry, Wall Street. It's not the law. Okay. This law has been around for 50 plus years. Okay. It's 100% legal to put alternative assets inside your IRA. Why most investors never heard of this? As I said earlier at the beginning, banks and brokerage profit. Fidelity, Vanguard, Charles Schwab, and thousands of other mutual fund companies earn their fees when your IRA buys their in-house mutual funds. They have zero incentive to tell you about alternatives. It is not taught in financial planning. Most so-called certified financial planners are trained on traditional Wall Street products. Self-directed investing is rarely a part of their curriculum that they're learning, so they are being brainwashed. Those CFPs requires a specialized custodian. You can't do this at a big box brokerage, like I said earlier, not Fidelity, not Schwab. They don't have self-directed custodian accounts to allow you to transfer your IRAs into alternative assets, just such as income properties. Okay, but you need a dedicated self-directed IRA custodian like Equity Trust, Entrust Group, and hundreds of other specialized self-directed custodian, or especially geared for real estate property owners. So, and another perception is complicated. It requires more paperwork and due diligence than buying a mutual fund. Yeah, maybe slightly more, but not that complicated. You just need education. Okay, I'm here to provide that for you. But the tax advantages makes the effort worthwhile. So the critical rules you must follow is there's no, okay, kind of boring, but I have to go through this. No self, oh, by the way, I may go real quick on a particular slideshow. When you replay the video, all you gotta do is pause the screenshot, digest the words as I have here on your own, then proceed accordingly. All right. So no self-dealing, no disqualified persons, all expenses from the IRA, you must be using for the IRA is an investment, is not for personal usage, is not for personal funds. Okay. All income from the IRA, rental income and sales proceeds must flow back into the IRA. You cannot pocket any returns. Okay. That's a prohibited transaction. So UBIT, okay, UBIT tax on leverage. I know I'm being a little bit complicated. If you use a non-recourse loan, which we will also discuss, I know I'm providing you some technical verbiage that you may not fully understand, at least initially, but try to understand the big concept. I'm trying to illustrate my point in a layman's terms as much as possible. All right. So if you use a non-recourse loan on your self-directed IRA to buy income property, a portion of the income and gains may be subject to unrelated business income tax, which is the acronym is UBIT. But look, don't get intimidated. It's not that significant in terms of taxes, just a small percentage in relationship to the whole portfolio itself. All right, just keep that in mind. That's not a good red flag. It's not a okay. I'm using a real case scenario. Okay, I'm using a single family home, a typical long-term rental, but not this type. Okay, I'm using uh, a regular single family home, but this time is not three-bedroom, two-bath, cookie cutter long-term investing. I'm using a co-living property. Some of you been with me, been with me with a yearless network. You know, I've been promoting co-living, rent by the room model, right, in several markets in the country. So I'm going to use this case method. I could easily use a traditional long-term property to illustrate a case method on this IRA strategies. All right, so bear with me. So this is a 7-bedroom, 7-bath, rent by the room, co-living, new construction model here in Jacksonville, Florida. The purchase price is $320K. So let's say you could use your self-directed IRA to buy, right? All you gotta do is transfer your traditional IRA, like do the paperwork transfer, simple request online to your other brokerage accounts that you potentially have your traditional IRA in a pretty or pure previous employers 401k, whatever, right? Gather up all those different brokerage accounts, those IRA, and do a simple transfer into a self-directed IRA custodian, then direct the custodian to buy these hard assets inside your IRA. All right, very, very simple, right? Uh, all right, so let me continue with this illustration. So you buy a $320,000 property. You let's say if you in this particular case, you use the entire cash. You do have 320,000 in traditional IRAs at least, okay, to transfer into a self-directed IRA to buy this single family home co-living property. So 340. So after you facilitate the transfer into the self-directed IRA. So on your IRA, you pay $341,000 in this property. You get a $7,000 monthly rent. Yeah, $1,000 monthly gross rent per room, right? So everything. So then you have to. There's no mortgage office that you pay in your all cash with the IRA. So you minus you have a gross monthly profit of 7,000. This is just projection, okay? I mean, it's again, this is just illustration. So your taxes, monthly insurance, property management fee, all the maintenance, utilities, the whole 9 yards, right? And then at the end of the day, this $320,000 purchase inside your IRA in this particular co-living single family property, you're getting $3,754 monthly cash flow, almost $4,000. So what you're going to do is you're going to bring, I mean, this money, this cash flow is growing tax-free, just like any other IRA. It's just like any other rules and regulation I just explained to you. This almost $4,000 of money are rolled back into the IRA. Okay, so if you look at the return of this property, the cap rate is 14%. So you have 14% yield on this all IRA cash purchase. Okay, and your annual first year return is 18%, but why is that a little bit higher on your annual ROI? That's because there's some additional benefit associated with purchasing this property. Anyway, at least 18 to 20%, almost double-digit return. What on your stock portfolio with the IRA, maybe 6, maybe 8% return, right? Right off the bat, without the power of leverage with a non-recourse loan, which I will talk about it right now. There's an all-cash purchase, so it's okay. It's okay to have $320,000 IRA to transfer out of your stock portfolio, tax-free, penalty-free, miscellaneous, minimal cost to transfer, very minimal, into a self-directed IRA to buy all cash with the IRA, and those are the returns, right? Impressed so far? You should be. The returns, even without leverage, is very, very powerful. And then finally, okay, this, just like any other traditional IRA, you will continue to gain the cash flow, reinvest into the self-directed IRA. You're not using the money yet. You're not retirement age yet. So invest for the next 10, 20, 30 years until age 59 and a half. Then you can potentially withdraw the money, okay, and not incur a 10% early withdrawal penalty at age 59 and a half. If for some reason you liquidate your cash flow inside your IRA before the age of 59 nine and a half, with certain exceptions. Then you have to pay a 10% early withdrawal penalty, and you have to pay tax on the at your ordinary tax rate on the amount of the withdrawal if you do it before the age of 59 and a half. And you don't want that, right? You don't want to withdraw the money too early because an IRA is designed for retirement at very much later in your life, at least 59 and a half or older, unless you have a Roth IRA, which Roth, which I may or may not touch on it because it gets a little bit complicated. All right, so far so good. All right, I mean, so are you still with me? All right, okay. I'm giving you some high conceptual 10,000-foot view of the tremendous benefit associated with using your self-directed IRA. One more thing. Okay, because this using a self-directed IRA to buy income property, you're already getting tax deferral. So some people may argue, oh, I'm not getting any depreciation. I'm not getting any write-off. We're not talking about a regular conventional purchase using your name, using a down payment from regular funds to 25% down payment to buy traditional ring income property and finance the mortgages, and all that. Yeah, in those situations, well, like most people do, right? The majority of people, they use regular, they buy income property using their name or and then they go through full doc loan and everything else. Then they can use the leverage of a loan to get depreciation tax benefit or the deductions write off and this and that, right? But so you have to make the clear distinction. When you buy inside the IRA, you already getting some tremendous tax deferral benefits, Section 408 of the IRS code, right? So if you're in a high tax bracket, 20% or higher federal tax bracket, all those years of accumulation of your income property, your cash flow, your appreciation, everything else grows tax deferred. You pay no taxes or you don't file any kind of tax return. You buy in the name of the IRA, not your name. Okay? When you buy income property using IRA, the IRA is the owner. You, as the actual real owner physically, are the beneficiary of the IRA, right? I hope you understand. Okay. All right. All right. Okay. I don't want to complicate things any more than I don't have to. All right, let's continue. So another powerful strategy, once again, most people are not aware of it, even if they are aware of the using self-directed IRA to buy all cash, to buy an income property, right, hard asset. It's the power of non-recourse loans. You can use everybody knows when you use when you use financing to buy a rental property, when you use financing, you're not putting 100% down. You're putting 25% down payment, right? That's why the return is higher. So you're using other people's money, not just yours. So your returns are much higher. Same thing with the IRA. This is a very specialized strategy. A lot of people still don't know about it. Although people know about the self-directed IRA using all cash IRA to buy a property, like I said, but the non-recourse loan is a specialized strategy, which if you truly understand and get educated, like you're doing right now through me, then then you know how powerful it is, right? So it's all about education and understand. Try to understand there are ways to get your return higher. And earlier, I already shared with you the case study I just did. You get an 18% yield on an all cash purchase of $320,000 IRA. This time, you're getting a loan. You're getting 60% loan using a I-course, non-recourse loan. By the way, to my knowledge, in this country, even today, 2026, there's only one non-recourse lender that does this. And I'm going to show you who they are, right? You cannot shop around for non-recourse lender to leverage your self-directed IRA to buy income property inside the IRA. This I'm about to show you the non-recourse lender that I've been using for years. Okay, don't bother to shop around. There's no true legitimate non-recourse lenders in the country other than this particular company I'm about to show you. But before I do that, I want to share with you what is a non-recourse loan. A non-recourse loan means the lender can only go after the property itself if you default. They cannot pursue your personal assets. They cannot pursue your other IRA holdings or any outside investment or portfolio accounts you have. This separation is what makes leverage possible inside a retirement account without exposing your personal wealth. Okay? Isn't that very comforting to hear? Once again, consult your financial or legal advisor to determine if non-recourse loans inside your IRA to leverage your income property inside the IRA is in alignment with your goals and your strategies and your objectives. All right. So how UBIT, I talked about UBIT earlier, works with leverage. See, when you have leverage, your return is going to be higher. So giving the non-recourse underwriting requirement, as I'm speaking to you in real time, the minimum requirement for this non-recourse lender, and I will give you the contact information for the lender momentarily. As of now, the underwriting requirement to use the non-recourse loan to your best advantage is the 40% down IRA. Okay, 40 you do a 40% down from your IRA money to buy this income property inside your self-directed IRA. And the non-recourse lender, their underwriting criteria is that they will leverage their portion, the 60% LTV, the 60% loan to value. Okay? Isn't this powerful? Try to understand from the big picture. The UBIT, okay, the UBIT tax only applies to the gain from the leverage portion of your rental cash flow gains, okay? Not the full property gain, only the leverage portion of the monthly or annual rental income. That portion is taxable with the UBIT, okay? All right? All right. Okay. Don't dwell on the technicality. You will in due time feel comfortable about it. So I'm using 40% down IRA and 60% non-recourse lending loan. So go to the same example, 320K purchase, 40% of the purchase price is 147,000. All you need is $147,000 or your IRA to buy this property. And the lender will the other 60% loan to value, which equal to $195,000 of loan of mortgage against this IRA purchase. And the rate, is a little bit higher, give or take. It all depends on the lending environment because non-recourse loan is sort of uh, I wouldn't say hard money loan, is a specialized private loan, right? I mean, you know what I mean? So the rate is a little bit higher. Let's say for the sake of our illustration, the loan rate is a 10-year fixed, whatever. I mean, 7.3%, a little bit higher than the traditional interest rate mortgage on a traditional investment loan purchase. All right, 7.3%. All right, so at the end of the day, your mortgage payment, 1336 on this non-recourse loan, is part of your income and expenses. It's part of you collect $7,000 rent. On an earlier example, minus vacancy loss equals 6650 operating income. You minus the typical property tax monthly, insurance, property management fee, the maintenance and upkeep and other utilities and everything else, and which is equal to 3754, and you minus the mortgage payment. Okay, the mortgage payment is inside your IRA, inside the custodial account, right? So 3754, all your monthly costs minus your non-recourse loan, okay, monthly amount 1337 equals your monthly cash flow $2,417. That is your cash flow on this particular property that your IRA will trigger on a monthly basis. Same thing. Okay, this $2,417 will roll back into your IRA inside your custodial IRA account. Tax deferral. You don't pay taxes on this cash flow. All right. So just by using leverage, your capitalization rate is still the same. All right. But your cash and cash return is 20%. You're leveraging. As a result, your returns are higher. Your return on your at the end of the first year is 32%, right? Because you're using leverage. You're only using $147,000 of your IRA to buy a $320,000 market value of this rental property. You're leveraging through this lender to the tune of $195,000 at only 7.3%. So even incorporating this mortgage debt as part of your expense and debt obligation scenario, you still cash flow $2,400 tax deferral. Okay, without the leverage, your all cash 320K purchase, as I go through earlier, right? You get $3,700 cash flow with no leverage, with no recourse loan, which is fine, nothing wrong with that. Okay, if you want to leverage your IRA more, you want to buy more properties using non-recourse loan leverage, feel free to do so. If you have a long-term goal, 10, 20 years to retirement at age 59 and a half or older, whatever, right? So $3,700 monthly net cash flow with all cash purchase with the IRA 320K, give or take, right? Actually, it's more than that, plus the closing costs and all that equals 341,000, not IRA. Okay, so your IRA 341K cash produced 3,700, but you use the power of leverage with a non-recourse loan, you come down to 2,400. So not bad. One thing that I would like to show you is that another advanced strategy. Let's say you facilitate this purchase, right? 417. This loan amount, 995,000. You know what you could do? Another caveat, another bonus, another value add that I can provide for you because I've been doing it for so long. Okay, I've been coaching and consulting risk investors to buy using conventional loans, regular purchase, 25% down, whatever, and using the power of self-directed IRA to buy income property, alternative asset, is that even if you use a loan, if you have a 10 to 15 year time horizon, let's say you're age 40 or even age 45. So you have a 13, 15, 17 year of to go to retirement. So even if you use the leverage of debt, non-recourse loan, right? This amount, $195,000, do you know you can have the ability to accelerate and pay down this loan in about 15 years? Okay, I know you have to do some formula calculation. I'm giving you a high level illustration. Okay, let's say you're age 40 or age 45. You don't need this money, right? Because you can't withdraw until 59 and a half. So this cash flow you have inside your IRA, even with the loan, 2417. What if you're not really ready to retire yet? You're not ready to withdraw your IRA money at age 59 and a half for a long time to come. Why not? Or instead of you can use this cash flow 2417 to systematically pay down your non-recourse loan. One extra payment per month. Use this 2417 instead of roll over tax-free into your IRA, which is fine. Instead of doing that, since your retirement horizon is so long, use this 24/7, paid extra principal per month, and within 10 to 15 years, this this non-recourse loan will be paid off. By the time you retire, almost paid off, right? I mean, okay, I need to do a calculation using a software to do that, but I'm just trying to illustrate you the conceptual big picture view. So in about 15 years, you paid off this loan by accelerating this tax-free more cash flow 24/17. Okay, I've done my calculation. Okay, if you pay one extra principal on your any kind of loan, let alone non-recourse loan, you're accelerating the loan instead of 30-year mortgage. You know, you've heard, right? If you pay one extra principal on a 30-year mortgage, you can pay off your loan in about 13 years. If you pay one extra principal per month instead of per year, your 30-year fixed rate debt could be eliminated within 10 years, right? Okay, some of you may not understand this kind of concept, but some of you do. All right. So by the time, let's say, when you accelerate this monthly tax deferral cash flow 24/17, and then next 10, 13 years, just when you're ready to retire at age 59 and a half or older. Yeah, I know you have to pay taxes on the amount of the withdrawal at retirement. Hopefully your tax bracket is lower uh, during that time, but may not be, right? A lot of people even make more money during retirement at age 59 and a half or older than during their working years. So I can't use this kind of a traditional assumption that upon retirement at age 62, age 63, your tax bracket will be lower, so you pay less taxes on your IRA withdrawal. That may not be the case. But the fact that you're getting so much tax deferral over time with respect to the self-directed IRA, with the cash flow and the appreciation inside your IRA account, that itself is a tremendous tax benefit. Who cares about lack of depreciation, lack of additional deductions on a conventional purchase of an investment property? Understand? Wow. I'm trying to educate you. I'm trying to inform you so you can become an excellent real estate investor. Okay. So I know a lot of you have a lot of IRAs. If you work for your employer, if you change job every 5 years for the next 30 years, do you know how many previous employer 401k you have accumulated from different brokerage accounts? Yeah, you have the ability legally to roll over those previous employer 401k account into a traditional IRA, into a self-directed IRA, and do the strategy that I'm teaching you right now to buy income property in a fast-growing area that cash flows, that give you a lot of good appreciation. Find a market that have a fundamental, very strong population growth, migration growth, job growth, the whole 9 yards. The example that I'm sharing with you in Jacksonville, Florida, or other places that we're promoting within my network. Yeah, that's the idea, right? Find the right property. Now, I'm not going to spend time doing that. There's my other YouTube video also or teaching you where to buy, right, within our network. Okay, but you get the idea. All right, so let's kind of conclude this. All right, so by in 13 years, all this debt is gone because you use this cash flow of whatever amount of $2,400, pay one extra principal per year per month. In 13 years or 15 years, this mortgage payment will be gone. This non-recourse loan that is paid off. At the end of the day, you're only using your initial 147,000 of the IRA. That's it. In 13 years, you can have this loan will be gone if you do the, if you do the early principal pay down of the loan. So at the end of the day, without the mortgage payment of 1,300, you add on to the 24/17. Okay, we're talking 3,800, right? You could have 3,800, would not even factor in the inflation and cost of living and everything else. So 13, 14 years without the non-recourse loan, you see how powerful the return are. You only put in $147,000 to buy 320K. At the end of 13, 14 years, you're going to have the value of way more than 320K, even at a modest inflation, appreciation rate of 5%. Your 320,000 property will be like $450,000 or $500,000 in 13, 15 years, right? We don't know the future, but you're putting so little of your original IRA money because using the power of non-recourse loan. You get to understand what I'm saying? So yeah, with a little bit of discipline in the next 10 to 15 years, if you want to, you don't have to. You can accelerate, pay off your non-recourse loan debt by paying one extra principal of cash flow inside your IRA 24/17. So when you're ready to retire age 59 and a half, you're gonna have a situation no different than when you initially bought this same property with all cash, all IRA cash with 341, right? Get the idea what I'm trying to say? Okay, this is the only non-recourse lender that clearly that you need to look into. All right, you can contact them directly if you want, or you go through me. Okay, First Western Federal Savings Bank. Okay, I have their contact information. I've been using this lender, this non-recourse lender for my IRA clients, investors for a very long time. They got different, non-recourse loan program. Their rates adjust, depends on the lending environment, right? Everything's subject to change. They have these maximum loan to value scenarios, and it's just, I'm not going to get into this. Okay, Roth IRA, some people have Roth IRA. It's not easy to do it. I'm not going to talk about this too much, but consult your tax advisor. Some of you have the ability to convert your traditional IRA into a Roth IRA during your working years, but you have to pay ordinary tax associated with the tax transfer from a traditional IRA into a Roth IRA. You have to pay ordinary taxation, so you have to you have to be very, very strategic to create a Roth IRA account. If you're able to do it, imagine, when you're a Roth IRA, all you gotta do is hold it for 5 years on your Roth IRA, and you can withdraw the money without any early withdrawal penalty, 10% early withdrawal, without any ordinary taxation, forever. So the power of Roth IRA is amazing, but Roth IRA is an after-tax retirement account contribution, tax deferral growth, and tax-free withdrawal if you have a 5-year holding period at least. So powerful, Roth IRA. You can apply the same strategy with the Roth IRA if you have a chunk of money. Not too many people can do it because if you're in a high tax bracket, it's not conducive for you to do the transfer from a traditional IRA into Roth IRA if you're in a high tax bracket. If you're in a low, if any given year, if you accumulate a whole chunk of a traditional IRA on 401k, previous employer 401k, right? You cannot transfer current employer 401k unless you quit the job, unless you retire, then you can roll over the previous employer 401k into a traditional IRA, into self-directed IRA. Imagine if you have a chunk of a Roth IRA, if you hold it for 5 years and you can buy income property inside your Roth IRA, hey, tax-free growth of your cash flow, of your appreciation, and tax-free withdrawal. You don't have to wait until 59 and a half, right? You can withdraw the money prior to the traditional 59 and a half per the IRS rule. If you do it right, if you're strategic, if you plan ahead, if you have your tax advisors to understand real estate, understand your overall financial goals, understand what kind of buckets of money you have in this and that, right? Okay, so it's important to surround yourself with a financial team of advisors, whether they are attorneys or financial advisors or tax advisors who understand real estate. Not too many financial people understand real estate, right? And they understand your goals. You have to align your goals, your objectives, your strategies with surround yourself with the right financial team that understand your unique goals and objectives. All right? Of course, we have those teams available within our network as well. So you can contact me directly. I will be more than happy to refer you those financial team of vetted professionals within our network who understand real estate investing. All right, I think that pretty much conclude my almost conclude my presentation, but this is a high level. Okay, it's all about paper transfer. It's not that difficult. You can do everything online. You could open up a self-directed IRA account. Choose one of any other self-directed IRA, custodian, equity trust, and trust, plus many others. Then you fund your step two is fund your self-directed IRA. Roll those money over in a few weeks. Tax-free transfer, right? Very little cost, right? And you're gonna get some pushback from those traditional stock brokerage companies. They don't want you to move money out of their brokerage account. Their financial advisors are not getting paid anymore if you roll the money over out of Charles Schwab, Fidelity, whatever, right? So they're gonna use all kind of tricks in the book to prevent you from roll over the money to a self-directed IRA. They're gonna say this is illegal. You can have a high risk, whatever. They're their stockbrokers, their financial advisors are not going to earn their commissions and their assets under management if you take it out of their Wall Street portfolios, right? So it's not to their best interest to encourage you to do the transfer, right? You're going to get the pushback from the Wall Street, right? From those mutual funds, IRAs. Okay, so be careful. There's a lot of conditioning and brainwashing involved from Wall Street for hundreds of years. Okay. Uh, anyway, then of course, you do the paperwork, you transfer over your traditional IRAs, for previous employer 401k, whatever, into a self-directed IRA account to legitimate custodial IRA companies that we have access to, right? We have those resources too. Then you fund your IRA. You find the property you want, right? You do all your underwriting, due diligence, whatever your goals are, whatever your strategies are, whatever your buy box. Of course, we like to recommend our own network of properties, single family home, new construction, cash flow properties located in Florida and Texas. To a traditional long term, we have available. We also have co-living, amazing co-living, rent by the room investment model, brand new construction properties, several areas in Florida and in Texas. So we have the team available to help you go through every single step, right? And our network, we support our investors long term if you do it within our community. So anyway, find the properties, the IRA, buy the property. When you then all cash flow or appreciation flow back into the IRA until it's time for you to withdraw the money years later. And at the end of the day, when you buy the IRA, here's the recap. When you use your self-directed IRA to buy income property, you as a person do not need to qualify. You don't need to submit your FICO score. You don't need to submit your tax return. You don't need to submit all your W-2 wages, stubs, and all those hassle, like you normally do, because you as an individual are not buying the property using the IRA. The, you're buying in the name of the IRA. Okay, you are just a beneficiary of the IRA, right? That's the beauty of buying a traditional IRA. You don't have to go through the stringent underwriting requirement. You have to submit your W-2, your all your tax return, all how hard that is. When you buy through the IRA, even with a non-recourse loan, you don't need to submit W-2 because you're not buying under your name like you normally do on a conventional regular purchase, right? I I'll talk about that. So whether you buy a traditional IRA or all cash IRA purchase or using a non-recourse loan, you're not using your name to qualify. You don't have to submit your FICO score, credit score. You don't have to submit your W-2, your employer stubs. You don't have to submit all your bank account information, your where you work, what job you have, how much money you make. None of that because you buy in the name of the IRA. Okay, that concludes my message, right? So my takeaway is to recap the power of using traditional IRA, convert it into self-directed IRA, easy paperwork transfer. It's all paperwork, online, everything's done, right? Just understand the paperwork process online. Everything is done online these days, right? Buying the property is done online also. Long distance, remote, turnkey property management. That's how we do it, right? Turnkey. You don't have to spend. You don't need a second job. You do not need a second job. You lend a professional property management, and do all the work for you. Whether you buy through the IRA or non-recourse loan, it does not matter because you're not creating a second job. You have time freedom. You can buy a whole bunch of properties inside or outside the IRA and spend only 1 to 2 hours per month in managing your portfolio. It is that simple. I mean, it's hands off. It's hands off, 100% turnkey. With professional property management, you're gonna delegate, you're gonna outsource everything. You just sit tight and enjoy what's important to you in your life. You don't need to do the labor. You don't need to be actively involved. You and your IRA own all your rental property, 100%, don't get me wrong. But time spent, you have time freedom. You don't need a second job. It's not total active business. It's almost passive, but you own it, 100% yours. Isn't it amazing? Right? That's a takeaway, okay? The power of using IRA and non-recourse loans inside your IRA to buy highly good return, long-term investment, long-term goal to achieve your financial freedom for yourself and your family. Okay? Don't let Wall Street, don't let Main Street condition and brainwash you into thinking your IRA only working in mutual funds inside Charles Schwab, Fidelity, whatever, inside Wall Street. You've been conditioned, you've been brainwashed. Okay, I'm here to unlock your brain. I'm here to unlock all the possibilities. You can use your IRA, all cash purchase using IRA and non-recourse loan leverage to buy alternative asset inside your IRA. It doesn't have to be income property, but I emphasize income property because this is what we do. You can buy, you can use your traditional IRA to buy any type of alternative asset as long as for investment purposes. Follow the rules, follow prohibited transaction, consult with your tax advisors, and build your real estate portfolio using regular conventional purchases, using 25% down under your name, right? Like you normally do, and whatever IRAs you have, right? If you're not happy with your portfolio, with your IRA, with the stock brokerages, hey, you have other options, okay? All right, that's all I have to say. If you receive any value from this presentation, please like and subscribe to my YouTube channel, and also put your email into my website below you so you can become a free member of our real estate investing community. Once you do that, every week in the morning, several times a week, in your email inbox, you'll receive free real estate information. So you can learn more about what we discussed today and then other types of real estate investing. Okay, so you can become a more educated and more informed investor. So you can take action to achieve generational wealth, long-term investing for yourself and your family. Thank you so much. This is Siwen Yi from the University Network. I'll see you next time. Bye-bye.